What if I told you that Las Vegas has just become the fastest cooling housing market in the entire United States? That's right. The city that never sleeps is now experiencing the biggest market shift we've seen since the Great Recession. Before you panic or celebrate, depending on whether you're buying or selling, let me break down exactly what this means to you. I'm here for your comprehensive August 2025 Las Vegas housing market update, which of course uses the closing numbers from July 2025. And today we're diving deep into the numbers that matter. We'll examine both single family homes and condos, analyze what's really happening with inventory levels that have skyrocketed by nearly 80% for attached homes, and I'll give you the straight truth about where this market is headed. Whether you're a first-time home buyer who's been waiting on the sidelines, a seller wondering if you should list now or wait, or an investor trying to time the market for your next move, this analysis will give you the data-driven insight you need to make an informed decision in this rapidly changing market. If we haven't met before, I'm Eric Hudson, a local real estate expert who helps hundreds of people find the right neighborhood, save thousands, and I cover the real pros and cons of living in Sin City, including the hidden gems you won't hear about anywhere else. Whether you're relocating for work, the military, or just chasing the sunshine, this channel is your honest guide for everything Las Vegas. No sugarcoating, just the facts you need. If you want more insider updates and real talk about Las Vegas living, hit the subscribe and grab your free location guide below. Let's get you home right away. Let's start with the numbers that are making headlines across the real estate industry right now. Let me paint you a picture of where we stand right now. In July 2025, the Las Vegas housing market closed with a total of 2,568 total transactions. That's combined single-family homes, condos, and townhomes. Now, that may seem like a healthy market, but here's the reality check. We're looking at a 5.8% decline in single-family home sales compared to July of 2024, and it's even steeper, 11.6% drop in condo and townhome sales. But here's where it gets really interesting, and this is the story that's not being told in the headlines. While sales are declining, inventory is absolutely exploding. We're seeing a 54% more single-family homes compared to last year, and a staggering 77% increase in available condos and townhomes. To put this in perspective, we haven't seen inventory levels like this since the market recovery following the 2008 financial crisis. What does this mean in practical terms? For the first time in years, buyers have choices, real choices. We're looking at 3.5 months of inventory for single-family homes and 4.8 months of inventory for attached homes. Now, a balanced market is typically, it sits about 6 months of inventory. So we're not quite there yet, but we're moving rapidly in that direction right now. The median price for a single-family home in July was $480,000. That's essentially flat from June, which was up 1% from last year. Compare that to the double-digit appreciation we've seen just 2 years ago, and you can see how dramatically this market has shifted. For condos and townhomes, we're actually seeing a slight price decline, with the median price of about $290,000, representing a 2% drop from last year. So let's dig just a little bit deeper into what these numbers really mean for different types of properties and buyers. Let's start with the single-family detached homes, which represent the largest segment of our market. In July, we saw 2,021 single-family homes close, which is actually up 3.9% from June, but down 5.8% from July of 2024. This tells us that while we had a seasonal uptick from spring to summer, the year-over-year trend is clearly showing a cooling market. Median sales price of $485,000 represent remarkable stability. It's exactly flat from June and only up 1% from last year. But here's what's really telling. The average sales price of $608,208, which is down 4.5 1.8% from June and down 1.8% from last year. When you see the average price declining faster than the median, it typically indicates that higher price homes are either selling for less or taking longer to sell. Now, let's talk about what buyers are actually experiencing in the market. The percentage of homes selling within 30 days has dropped to 56%. That's down from 61% in June and significantly down from 69.9% in July of 2024. That means that nearly half of all homes are now taking more than a month to sell, giving buyers much more time to make a decision and to negotiate. Speaking of inventory, we have 7,147 single-family homes available without offers. That's up 54.2% from last year. To put this into context, at the peak of the seller's market back in 2021, we might have had 2,000 to 3,000 homes available. Today's inventory level represents a fundamental shift in market dynamics. The composition of sales tells an interesting story about who's buying and how they're financing their purchases. Of the 2,024 single-family homes that closed in July, 46% were conventional financing, 22% were cash, 18.6% used FHA loans, and about 10.6% were VA loans. The fact that nearly 1 in 4 purchases are still cash shows that we still have strong investor activity and affluent buyers who aren't affected by interest rate changes. Let me share with you some fascinating details about what sold in July. We had 1,161 single-story homes sell. That's about 45% of all sales, showing that continued preference for ranch-style living. 430 homes sold with private pools, which in Las Vegas is almost a necessity rather than a luxury. 496 homes had a 3-car garage, indicating a strong demand for larger family-oriented properties. Here's something that might surprise you. 978 homes sold in gated neighborhoods. That's 38% of all sales are happening in gated communities, which speaks to buyers' continued desire for security and exclusivity, even in a cooling market. On the flip side, 565 homes sold with no HOA, showing there's still a strong demand for properties without monthly association fees. The luxury segment is particularly interesting. 241 homes sold with 5 or more bedrooms, and 230 of those had 3 or more bathrooms. These larger homes are still finding buyers, but they're taking longer to sell and often require more negotiations on price. For new listings, we saw 3,242 single-family homes come onto the market in July, which is essentially flat from June, but up 9.5% from last year. The median asking price for a new listing was $519,900, which is 4% higher from last year, but unchanged from June. This suggests that sellers are starting to price more realistically rather than chasing higher market returns. The months of inventory calculation shows that we're about 3.5%, which is up 63.7% from last year. While this is still technically a seller's market, remember, 6 months is considered balanced. We're moving rapidly towards equilibrium, and at the current pace of sales, it would take 3.5 months to sell all of our available inventory compared to just over 2 months last year. Now let's turn our attention to the attached homes, the condos and the townhomes. This is where our market shift is a lot more pronounced. This segment closed 547 units in July, which represents an 11.6% decline from last year, significantly steeper than the single-family decline. However, we did see a 6.2% increase from June, suggesting some seasonal recovery. The median price for the attached homes was $290,000 in July, which is down 4.9% from June and down 2% from last year. This is particularly significant because it represents actual price declines, not just a slower appreciation. The average price of $308,176 is down 1.7% from June and down 0.7% from last year, showing that the entire price spectrum for attached homes is under pressure. The inventory story for attached homes is even more dramatic than single-family homes. We have 2,622 condos and townhomes available without offers. That's a 77% increase from last year. To put this in perspective, this represents 4.8 months of inventory, which is closer to a balanced market than the single-family homes. The time on market statistics tell a compelling story. Only 47.5% of homes are selling within that 30 days, compared to 50.7% in June and 61.6% last year. This means that more than half of all condos and townhomes are taking more than a month to sell, giving buyers significant negotiation powers. Looking at the financing breakdown for the 551 attached homes that were sold, we see some interesting patterns. 37.6% used conventional financing, but notably, 29.9% were cash purchases. That's a higher cash percentage than single-family homes. This suggests strong investor activity in the condo and townhome market, likely driven by lower price points and potential rental income opportunities. FHA financing accounted for 20.9% of it, which is slightly higher than single-family homes, which makes sense given the lower price points, making these properties more accessible to first-time buyers who often use for FHA loans. VA represents 8.3% of purchases, showing continued military and veteran interest in more affordable housing options. The new listing data shows 938 of these home choices came to the market in July, up 13.6% from last year, but only 1.3% from June. The median asking price for new listings was $296,500, which is essentially flat from June, but up 0.5% from last year, which suggests that sellers of attached homes are becoming more realistic about pricing than even for the single-family sellers. What's particularly interesting about attached home market is the variety of property types and features. We're seeing strong demands for townhomes with private patios and small yards, especially those in the newer developments, properties in age-restricted communities. We have 171 sales in this category, and it continues to attract retirees and empty nesters looking to downsize. The condo market specifically is being influenced by several factors. High-rise condos on the Strip and in downtown Las Vegas are seeing different dynamics than suburban garden-style condos. The luxury condo market, particularly in buildings like the Martin, Turnberry Towers, One Las Vegas, they're experiencing longer market times, but still attract buyers looking for lock-and-leave lifestyles. For investors, the attached home market represents interesting opportunities. With rental rates still strong here in the Las Vegas area, and purchase prices moderating, the cash-on-cash returns for rental properties are improving. However, investors need to be selective about locations and property types, as not all areas are experiencing the same rental demands. To understand where we're going, we need to understand where we've been. Let me take you through the Las Vegas housing market journey from 2017 to today, because this context is kind of crucial in making some informed decision. Back in July of 2017, the median single-family home price was around $310,000. By 2018, we're at $325,000. The market was growing steadily, but substantially. With annual appreciation in the 5 to 8% range, inventory was healthy and buyers had reasonable choices without the feeding frenzy we'd see later on. Then came 2019 and 2020, and everything changed. In July of 2019, we saw median prices of about $340,000. But in July of 2020, we were at $360,000. The pandemic hit, and suddenly everyone wanted to move to Las Vegas. No state income taxes, relatively affordable housing compared to California, and the ability to work remotely made Las Vegas incredibly attractive. By July of 2021, when things had really accelerated, the median price had jumped to $420,000. That's a 15% increase in just 1 year. Homes were selling in days, often with multiple offers above asking price. Inventory was virtually non-existent. If you were selling, it was like winning the lottery. If you were buying, it was a nightmare. By July of 2022, we had hit $465,000, another 10.7% increase. But here's where the story gets interesting. The Federal Reserve started raising interest rates aggressively to combat inflation. Mortgage rates, which had been in the 2 to 3% range during the pandemic, started climbing towards 5%, then 6%, then 7%. July of 2023 showed the first signs of cooling. Median prices actually declined to $450,000, a 3.2% drop from the previous year. Sales volumes started declining and inventory began to build. The market was sending clear signals that the party was over. July of 2024 saw a modest recovery to about $480,000, up 6.7% from 2023, but sales volume remained depressed. Inventory continued to build, homes started taking longer to sell, the writing was on the wall, and we were transitioning from a seller's market into something more balanced. Now in July of 2025, we're at $485,000 for single-family homes, essentially in flat growth. But more importantly, we're seeing a fundamental shift in market dynamics that haven't been present since before the pandemic. For attractive homes, the story is similar but more volatile. From around 220,000 in 2017, we've climbed to 3,500 July of 23, then 296,000 in 24. Now we're at 290,000, actually declining year over year. What particularly significant about this historical context is the inventory story. During the peak sellers market years of 20 to 22, we might have had 1,500 to 2,500 single-family homes available at any given time. Today we have over 7,000. That's not just a market shift, it's a fundamental rebalancing. The time on market trend tells a similar story. In 2021, 80-90% of all homes were selling within 30 days. Today, it's 56% for single-family homes and 47.5% for attached homes. Buyers have gone from having no time to think to having weeks or even months to make a decision. This historical perspective is crucial because it shows that what we're experiencing isn't a crash, it's a normalization. The 2020 to 2022 period was the anomaly, driven by unprecedented monetary policy, pandemic-induced migration, and supply chain interruptions. What we're seeing now is the market finding its natural equilibrium. The question is whether this trend will continue. It's how far it will go and how quickly. Based on historical patterns and current economic conditions, we're likely to be looking at continued moderation through the rest of 2025 and into 2026. Let's talk about the elephant in the room, mortgage rates. As of early August 2025, we're seeing some encouraging trends. The 30-year conventional rate has dropped to about 6.63%, down from 6.73% just a week earlier. FHA and VA rates are under 6.2%, and 15-year conventional rates are down to about 5.72%. Remember, I'm not a lender. I'm just pulling stuff from the news, okay? Now, these rates are still significantly higher than the 2 to 3% rates we saw during the pandemic, but they're moving in the right direction finally. Most importantly, Federal Reserve officials are signaling possible interest rate cuts, and some Fed governors are advocating 3 rate cuts before the end of 2025, but we've heard that before, right? Here's why this matters for Las Vegas specifically. Our markets have always been more interest rates sensitive than other places like San Francisco or Manhattan because we have more first-time buyers, more move-up buyers, and fewer all-cash purchases. When rates were at 7% earlier this year, it priced out a significant portion of potential buyers. As rates moderate, we should see some of that demand return. But let's be realistic about what this means. Even if rates drop to 6%, we're still talking about monthly payments that are 60 to 80% higher than they were in 2021. A $485,000 home with 20% down at 6% interest rates, that results in a monthly payment of about $2,320 a month. That doesn't even include the taxes and insurance. That same house, the same payment at 3% would have bought you a $650,000 home. For those of you who don't know, there's a huge difference between those two homes. Trust me. Trust me. The broader economic picture is also influencing our market. Las Vegas has always been tied to tourism and entertainment. While those industries have recovered from the pandemic, there are new challenges. Consumer spending is moderating. Business travel hasn't returned to pre-pandemic levels, and there's general economic uncertainty about inflation and potential recession. However, Las Vegas has some unique advantages that are supporting the housing market. We have no state income tax, which continues to attract businesses and high earners from California and other high tax states. This city is diversifying beyond tourism with significant growth in technology, logistics, and renewable energy sectors. Population growth, while slower than during the pandemic boom, is still positive. We're seeing continued in-migration from California, though at more sustainable pace than the flood we experienced in 2020 through 2024. This steady population growth provides underlying demand for housing. The construction industry is also adapting to new realities. Builders are being more cautious about starting new projects, which should help prevent the oversupply issues that plagued Las Vegas during the last housing cycle. However, there is still a significant pipeline of homes under construction, which should hit the market over the next 12 to 18 months. One factor that's often overlooked is the rental market. Las Vegas rental rates have remained relatively strong, which supports investor demand for properties. While purchase prices have moderated, rents haven't declined proportionally, which actually improves the investment fundamentals for rental properties. The employment picture here in Las Vegas is mixed but generally stable. The unemployment rate remains below national averages, and job growth, while slower than during the recovery period, is still positive. The key is that we're seeing more diverse job creation rather than just tourism-dependent employment. If you're a buyer in today's Las Vegas market, we're in a fundamentally different position than you would have been just 2 years ago. For the first time since before the pandemic, you do have more choices. Choices in time and negotiation power. Here's how to use these advantages effectively. First, take your time. I cannot stress this enough. With 56% of the single-family homes and less than half of the attached homes selling in less than 30 days, y'all need to make a snap decision. Use this time to really understand the neighborhoods, get multiple inspections if needed, and ensure you're making the right choice for your long-term needs. Second, go ahead and negotiate stuff. In today's market, sellers are usually much more willing to negotiate on price, closing costs, repairs, and even include things like appliances and furniture. Don't be afraid to ask. A closed mouth don't get fed. The worst thing they can say is no. In many cases, they may work with you to get the job done. If not, trust me, you heard my mantra, new construction. They will work with you. Plus, you get a better house. And speaking of that, consider new construction very seriously. Builders are offering significant incentives right now. That includes interest rate buy downs, closing cost assistance, upgrades. Rate buy downs can effectively reduce your interest rates by 1 or 2%, if not more, for the first few years of your loan, if not the entire loan, which can save you hundreds of dollars a month, if not hundreds of thousands of dollars over the life of that loan. Some buyers are even offering to pay points to permanently buy down that rate, just saving you so much money. For financing, shop around aggressively. Different lenders are offering different rates and terms. And the spread between the best and the worst offers, they can be significant. Consider working with a mortgage broker if necessary. They can shop around several different lenders, and they can do that for you. I may recommend folks, but shop around. So I'm being very honest with you. Also, look into different loan programs. VA loans, like right now, the day of this recording, they're under 6.2%, which is significantly lower than the conventional rates if you qualify, because that's my baby, VA loans. Location is important, way more important than ever. With inventories levels varying significantly by area, some neighborhoods are still competitive while others have abundant choices. Areas like Henderson and Summerlin still tend to move faster than North Las Vegas and some of the older areas in the Central Valley neighborhoods. Understand the micro markets within Las Vegas, and shameless plug. Keep watching this channel. I'm planning to go out there and do a lot more of these neighborhood tours for you guys. Don't try to time the bottom up perfectly, because you never will. Yes, prices may moderate, and yes, interest rates may come down, but trying to time the market, that's called a fool's errand. If you find the home that you love at a price you can afford, and you plan to stay for several years, I know realtors are always saying this, it's probably a good time to buy. Consider the total cost of ownership, not just the purchase price. A home with a higher HOA fee, older systems that need to be replaced, or higher property taxes might not be the bargain it appears to be. Factor in the maintenance, utilities, and potential improvements when calculating affordability. Drop a comment below if you want me to go over that stuff to figure out your affordability. I may do a little series on it or something. First-time home buyers. This market represents the best opportunity we have possibly seen in years. I know it may be a little higher cost right now, but think about it. FHA loans are available at competitive rates, and with more inventory, you're not competing against 10 other offers right now. Take advantage of first-time buyer programs, including down payment assistance programs that are available through the Nevada Housing Division and several other programs. Reach out. If you want me to, leave a comment below. I need some good fodder for videos to put out. I find it sometimes hard to bring lenders on because they can, yap a little too much about, stuff. But I do want to put some more stuff out there about programs. Unfortunately, I'll have people, I talk about a program that's 4 years old, and people will call and then they'll, I'm going to keep going. If you're an investor, focus on cash flow rather than appreciation. With rental rates still strong and purchase prices moderating, the fundamentals of rental properties are improving. Looking for properties in areas with strong rental demand, good schools, and convenient access to employment centers. Finally, work with experienced agents understanding market transitions. The strategies that worked in the 2021 seller's market, they don't apply today. You need someone who can help navigate negotiations, understand market timing, even though I say don't time, and identify opportunities that others might miss. I'll help you navigate some of these issues, but if you're deep into the whole investing thing, I will help you, put you with some of the agents I work with, because I really am passionate about helping, people get into their homes. Not as much about investors as helping people. So if you're thinking about selling in today's market, you need to understand that the rules have changed completely. The days of listing your home on Friday and having multiple offers by Monday, that may be over. Success in today's market requires strategy, patience, and realistic expectations. I can't say this enough. Price it right from day one. This is absolutely critical. With 77% more inventory for attached homes and 54% more inventory for single-family homes, buyers have choices. If your home is overpriced, they just simply move on to the next. Look at the recent comparable sales. Not what sold 6 months ago, not what your neighbor priced their house at, but what sold in the last 30 to 60 days. And not what Zillow says your house is worth. Stop that. Price competitively to generate activity in the first 2 weeks, and stop saying what I'm thinking is, or what you need to move to your next look, that is your death knell. Presentation matters more than ever. When buyers have dozens of options, your home needs to stand out. This means professional photography, staging if necessary, most importantly, virtual staging if you can afford staging, and addressing any obvious maintenance issues before the listing. Small investments in paint, landscaping, and decluttering will yield you significant returns in a competitive market. Be prepared for longer marketing times now. Don't start calling your agent up saying why your home hasn't sold after 2 weeks. No one's home sold in 2 weeks. The average home is now taking 51 days to sell compared to 36 days last year. This doesn't mean your home won't sell. It means you need to be patient and maintain the property during the marketing period. Keep it clean, continue landscaping maintenance, and be flexible for showings. Consider offering incentives. Buyers are looking for value now, and sometimes that means more than just a lower price. Considering offering to pay for the closing costs, including the home warranty, or even offering rate buydowns. A $5,000 contribution towards a buyer's rate buydown might be way more attractive than reducing the price by $5,000 because that affects their monthly payment. Be flexible on the terms. In today's market, the buyer who offers the highest price may not be the best buyer. Consider offers with longer inspection periods, later closing dates, or other terms that work for the buyer's situation. A slightly lower offer from a well-qualified buyer might be better than a higher offer with risky financing. Understand your local market. Not all areas of Las Vegas are experiencing the same conditions. Luxury homes in Summerlin might still move relatively quickly, while starter home in North Las Vegas might take longer. Work with agents who understand specific dynamics of this entire market. If you don't need to sell immediately, consider waiting. The market is clearly in a transition. If you can wait 6 to 12 months, conditions might improve. However, don't wait indefinitely, hoping for a return to 2021 conditions. That market was a unicorn, an anomaly. And I'm going to tell you right now, it's not coming back, ever. For those who must sell now, consider alternative strategies. Rent back agreements can give you more time to find your next home. Lease option arrangements might attract investors. Some sellers are even offering seller financing to buyers who can't qualify for traditional mortgages at current rates. Marketing is crucial in today's environment. Your listing needs to be visible across all platforms: MLS, Zillow, Realtor.com, social media, agent networks, professional photography, virtual tours. That's not an option anymore. They're essential. Consider video tours and even virtual staging for your vacant properties. Let me tell you that right now, I can do virtual staging for you. That's like a shameless plug. And there's other stuff that I'm doing right now that is like really out there that other agents in this market and most markets aren't doing. That's involving AI. We are in a new era that is necessary to sell homes. Price reductions should be meaningful and strategic. If your home hasn't generated activities in the first 2 weeks, don't make them little small adjustments. Let's try 1,000 here and 5,000 here. Make a significant adjustment that will generate new interest and showings. I know, people kind of like, well, I need something else for someone to do. I don't want to talk about price. No, you need to talk about a $20,000 reduction. Early in the process is better than these little small stair steps. It will actually make you more money. Finally, when choosing your agent, choose carefully. In a seller's market, almost any agent can sell your home. A blind monkey with a wet football can sell your house. In today's market, you need someone with experience, marketing expertise, negotiating skills. Look for an agent who is looking into what is now required to sell homes. Believe it or not, there is a new skill set that is needed to sell homes. That is not the skill set that has been used over the past few years. I don't want to get too deep into it because I don't want other agents to know what these new skill sets are, although they're going to probably figure it out really soon. And then, just like anything else, real estate agents are going to ruin it. As we wrap up this comprehensive analysis of the July 2025 Las Vegas housing market update, let me leave you with some key points and thoughts about where we're headed. Las Vegas housing market is undergoing a fundamental rebalancing. We're transitioning from an extreme seller's market to something much more balanced and substantial. This isn't a crash. It's now a normalization. We're returning back to the way real estate used to be. The pandemic years created an artificial condition that we're never going back to. I hope we never go back to. I mean, like, do you really want to go back to masks? For buyers, this represents the best opportunity we've seen in years. You have choice, time to make decisions, real negotiation power. Take advantage of this window, but don't try to time the market perfectly. For sellers, success requires adapting to the new realities. Price competitively, present your home well, and be patient. The market will reward those who approach it strategically. And also, I know a lot of people are starting to take their homes off the market because they're not getting what they want. Stop playing. If I don't win at marbles, I'm going to take my marbles and go home. You're going to actually lose, for real. Looking ahead for the rest of 2025 and into 2026, I expect continued moderation in price growth and gradual improvement in affordability as rates potentially decline, and more balanced market that serves both buyers and sellers better than the extremes we've experienced. The fundamentals supporting Las Vegas remain strong. Population growth, economic diversity, favorable tax environment, and relative affordability compared to coastal markets. This market correction is creating opportunities for those who understand the new dynamics. Remember, real estate is local and timing is personal. Whether you're buying or selling, make decisions based on your specific situation, not market predictions. Work with experienced professionals who understand current conditions and focus on long-term value rather than short-term market movements. The Las Vegas housing market is evolving, and those who adapt to the new realities will find success. Thank you for sticking with me for this comprehensive Las Vegas August housing market update. I hope this video has given you the clear, honest picture of the housing market you may need to make the best decision for your future. If this deep dive was helpful, please give me a thumbs up. It really helps the channel. And if you want to stay updated on everything happening in Sin City and get more insider insights about Las Vegas living, make sure you're subscribed and have that bell notification tap. I share crucial updates every week. What do you think? Are you still considering Las Vegas? Or did this video change your mind? Now, if you're feeling ready to explore your own slice of Las Vegas or simply want to talk through your specific situation, don't hesitate. Reach out for your free personalized consultation. Call or download your free Las Vegas relocation guide. The links for both are right down in the description. And yep, I'm still working on it. I'm here to help you find that perfect neighborhood and avoid those costly mistakes we discussed. For my military brothers and sisters, you know the drill. Alpha Mike Foxtrot, everyone else, thank you for being part of this community. I genuinely appreciate you and will always keep those lights on for you here. And remember, there's always more to learn about making a smart move to Las Vegas. Go ahead, click on that next video that's suggested for you about our YouTube. They say you're gonna love it. I'll meet you over there, okay?